Alrighty, well, let's talk about big bank earnings. Give a cautious green light of the economy. And every quarter, we get pretty excited about listening to and reading about the things what banks have to say in the most recent quarter as they release their earnings. I'm primarily talking about J.P. Morgan Chase, Bank of America, Citigroup, and Wells Fargo, the four big ones. We've had a couple large banks in our portfolio for years, and they have provided very useful information along with great returns as well.
That's so funny because we always talk about, it's not, tech. And I'm going to steal a little bit, I guess, from our portfolio. You look at like a J.P. Morgan Chase over the last, its performance is amazing. I mean, it's done so well. So, I mean, you can still do well outside of tech and different businesses is what we always look at. And in particular, when we looked at the most recent earnings and kind of listened to conference calls from these big banks, I mean, they were happy with the fact that there were low rates of consumer delinquencies, and the amount of debt they wrote off as unrecoverable stayed around the same as last year. And I'll point out, that was a good level.
Yes, very good level. Yes.
It's like, it stayed about the same at a terrible level. That's not good news, but at a low level, it's good to see. And we've talked about this, but one banker made a comment that with a 4.1% unemployment rate, it's not likely to see a lot of weakness in their portfolio. And, we continue to think that as the employment situation remains strong, I just think the economy should do well. People, if they're making money, they have jobs, they have incomes coming in, about that debt out there, you should be able to pay off that debt, or at least make the payments on the debt. There are always going to be people that over leverage themselves, unfortunately may lose their job. But as a whole, I still think we're in a good spot. And it irks me when you hear, the economy's not doing well because of, student loans. Well, student loans are such a small piece of the puzzle. Even auto loans, you hear that one more frequently as well. Auto loans aren't doing well. To me, I don't want to say it doesn't matter, but it's not like the mortgage crisis because it's such a small piece compared to how big mortgages were. Too, mortgages are 30-year loan. Auto loans are generally like 5-6 years, and it's on a depreciating asset, so it's not going to cause the same type of catastrophe that the mortgage crisis did.
And the reason we get excited about this is because we've been talking about this, but when the banks come out with confirmation, and again, and your credit cards are generally the first thing people stop paying on. Yeah. You said that's about the same as last year, the debt. So that's fine. I mean, this is why we look at these things, because you can always find somebody like, it's very difficult for them and so forth. Of course it is. But as a whole, we have a very big economy. You have to look at all the population and say how it's doing. That's why we love reading what the banks have to say, because each quarter it's that nice update on the consumer.
And banks can't lie. They can't say, no, we didn't have any bad loans. Right. Now, they might fabricate how great things are, but generally bankers don't do that. So I think it is, again, a good reading.
And they can't say something like the rate was the same as last year. Yeah. They cannot lie on that.
They can't lie about that.
Can't lie about that, no. So, but another thing too with banks, they do deal making, and for the banks, it looked pretty good across the board, and all of them had profit increases compared to 1 year ago. Again, profits are up for the banks in deal making. The overall tone from the bankers was largely upbeat. A couple of banks did call out some concern around commercial real estate and office buildings. But the big thing, and we've talked about this as well, there are certain cities with economies that are doing well, but then there's some cities that aren't doing so well. And that's where the commercial property is not doing well. But banks have a diversified portfolio across the whole country. So if you're looking at where to invest, and we use a real estate investment trust and property, we picked one that is just in the strong areas. Yeah,
and I think it's important, again, when we're talking about the large money center banks, they're generally not going to have over-concentrate in certain areas, but we talked about the REIT, but if you're looking at a bank, if you're looking at, let's say, a regional bank, maybe a smaller regional bank, if they're not in the right areas, their loan portfolio could have some issues. So just kind of one thing to separate. Here we're talking about large money center banks. There's not going to be a portfolio concern because they are so diversified across the country. And again, looking at these details, I'd say the banks as a whole, they felt pretty darn good about where things are at, but they still remain somewhat cautious. And I got to say, that's how bankers operate. You listen to Jamie Dimon, he always talks about risk. And a banker should always be concerned about risk because not everything is going to be perfect. But, people always pull out Jamie Dimon says the economy is going to crash. And then you go look at it and it's like, he assigned like a 10% chance to it. And those aren't real numbers. They're just kind of fabricated based off what he said in the past, where everybody pulls the bad thing, but then you actually listen to the details. And he's like, well, yeah, he's assigning a probability to that. There's always a chance we tip into a recession. But you have to consider the worst case scenario and plan your business around that, because if we go through a recession, you want to make sure that bank can stay strong, not just for a shareholder's perspective, but also as a citizen of America. You want to make sure these banks are okay, because we know how bad things were in 2008, 2009 on the brink of collapse there.
Yep. And I just love listening to like Jamie Dimon. I have my favorites that I listen to on the conference calls. And Jamie Dimon, he's just so straightforward, no hype, no hiding things. It's just straightforward. And I always look forward to his conference calls. A few other companies we have, I just look forward to. I can't wait to hear what they have to say.
Yeah.
So